Yeah, I mean, if you look at the demand for stable coins, most of it's for US dollar stable coins, USDT, USDC.
Mhm.
There's not a lot of demand for stable coins that represent, your favorite Egyptian currency or South African currency or Nigerian currency or the like.
Mhm.
So that's what I think. Yeah. So the Bitcoin treasury companies are giving you the ability to get Bitcoin exposure with someone else's capital or with capital that's stranded. And that's why they're growing rapidly. And that's why we need more of them.
At a time when Bitcoin is experiencing new pressure, Michael Saylor frames the conversation around the concepts of strategy, wealth, and cycles. As a result of President Trump's latest tariff order, which rattled confidence around the world, the price fell below $115,000 for the first time in 3 weeks, reaching $114,250 after only half a day. The policy change caused a total of $110 billion in cryptocurrency withdrawals and $630 million in trader liquidations, the majority of which were caused by over-leveraged long positions. Now that Bitcoin is 6.5% below its peak price of $122,800, in the middle of July, many people are wondering if this is the beginning of a more significant downturn. Nevertheless, there are analysts who suggest that the decline is not a complete trend break, but rather a reflection of typical profit-taking, broader market worries, and geopolitical worry.
I would create a currency and then I would back it with Bitcoin. I think Bitcoin is digital capital, so you want to have that as a reserve or a central bank reserve, just like you might have gold in the old days, or you might have tangible assets. But I would create, I'd probably create another currency that's closer pegged to the dollar, or it's floating plus or minus a bit near the dollar as the fiat currency of the nation. I think in the modern world, the best conception of money is that money has a medium of exchange component and it has a store of value component, and you have a unit of account for the store of value and a unit of account for the medium of exchange. So the right metaphor is just think of the dollar versus BTC, or checking account versus savings account, and so you're going to have sort of high speed dollar type instruments to price things in day to day. And then you're going to have another capital asset that you're going to use to store your value over the course of 100 years. And I think that it's like, I don't run a country, so no one's asking me, but I think it would be a mistake to try to establish a currency with a capital asset. For example, you don't really want to price all your sandwiches in New York City real estate, nor do you want to price your sandwiches in ounces of gold, nor do you want to price sandwiches in Picasso paintings, right? I think that you've got capital and you've got currency. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar or the Naira, like something which is inflating at 14% a year or 30% a year. I think you've got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency. It's not a weak currency. It's a capital asset. I think that that you have a few currencies that are kind of pegged to the dollar that are struggling on, and I think you have a lot of currencies that are collapsing against the dollar, and then you have the dollar. And so if the stable coins succeed, and they're going to succeed, If the U.S. Passes the Genius Bill, and then U.S. corporations and banks are able to issue stable coins backed by U.S. dollars, then that market's going to go from 250 billion to a trillion to 2 trillion to 4 trillion to 10 trillion. And you have to ask the question, who's going to be buying it? And the answer is people that might have otherwise had rubles or CNY or every African currency and every South American currency. So I think the weak currencies of the world are going to gradually be marginalized. I think that the dollar will grow. I think weaker currencies will be marginalized. Yeah, I mean, if you look at the demand for stable coins, most of it's for US dollar stable coins, USDT, USDC. Mm-hmm. There's not a lot of demand for stable coins that represent, your favorite Egyptian currency or South African currency or Nigerian currency or the like. Mm-hmm. So that's what I think. Yeah. So there's 100x more money available for credit or equity, and it's like 700 billion versus 35 trillion available for equity. So at the end of the day, the money is sitting in these funds that have mandates to invest in equity, and they can buy blockchain group, or they can invest in Smarter Web, or they can invest in MetaPlanet, or they can invest in strategy. They just can't invest in Bitcoin. They can't, they won't, they just can't. So it's just that simple. So these companies are essential in order to bridge the traditional finance economy with the crypto economy. And if you don't have the companies in the middle, there's no way for the capital to flow. But with the company, like Smarter Web or like MetaPlanet, then the capital that is locked up in a retirement account in Tokyo or London can flow into a Bitcoin treasury company that can then take it and buy Bitcoin with it.
While Bitcoin had a decline, Ethereum experienced a more robust recovery. Despite significant selling pressure, Ethereum ETH outperformed Bitcoin BTC after falling to $3,600 due to tariff news. It swiftly rebounded toward its crucial $3,750 zone. Retail traders were the first to buy the decline, despite the fact that they were suffering the most from liquidations, which totaled $115 million in just 5 hours. ETH's rebound was fueled in part by their conviction, and the fact that the financing rate has turned negative for the first time since June is seen by many as a bullish change that suggests the worst of the selling is past. To add fuel to the fire, exchange-traded funds, ETFs that track Ethereum, have already reported 19 consecutive days of inflows, and their total holdings are getting close to $22 billion.
And we could go into lots of details about why is it like that, and is it fair, and is it rational? It's above our pay grade. The world is structured the way it's structured, and that's where the capital is. And the way you got to look at it is in a couple of seconds, the money can move from there into the equity, or we can wait 30 years and see if the world changes, and then maybe it will and maybe it won't. But it's like 30 seconds or 30 years. Like that's your issue. So the Bitcoin treasury companies are meeting a need, right? They're bridging the gap, and they're solving this problem for the investor, and that's worth something. And so that's why they merit a premium. And then because they generate that premium, because they're more tax efficient, they're more capital efficient, or again, simple example, I give you a suburb, and on the left side of the street are houses that you can buy and put a mortgage on with no money down, and it's cheap mortgage. And the right side of the street, you have to pay for the house in cash. Okay? And you've got the identical houses on both sides of the street, but what do you think the house on the left side of the street that you can get no money down will trade at a premium to the house on the right side of the street that you got to pay for with cash? Right? I mean, the answer is obvious, right? The house on the left side of the street will be double or triple or quadruple, because the world's full of people that want a house, and the world's full of people that don't have the money to pay for the house. So, so the Bitcoin treasury companies are giving you the ability to get Bitcoin exposure with someone else's capital or with capital that's stranded. And that's why they're growing rapidly. And that's why we need more of them. I don't have a strong model. I just think every quarter, every year, we get more adoption. And it's going at a different rate in different parts of the world. That's the famous William Gibson phrase, the future's already with us, it's just not evenly distributed. So in some places, the adoption is going to be more conservative, and it's going to manifest itself in financial institutions that are conservative. And in other cases, it'll be through new technical things. Like for example, the news story this morning was the largest shareholder in my company is Vanguard.
Mhm.
Okay, so that's an example of hyper conservative adoption because Vanguard's a company run by a CEO that said that he doesn't believe in Bitcoin and they don't want to let anybody buy it. Okay, it's not a technology leader, right? It's not the Bitcoin is running on an iPhone or an Android phone. It's not an AI. It's actually a completely passive adoption. But it's so passive and subtle that even the company that doesn't even like the asset ends up owning a lot of it, right? So I guess the metaphor is like, okay, you're a retired firefighter and you own Bitcoin even though you hate it. You see, well, how did I end up owning it? Well, I mean, I've got a pension fund and the pension plan is sitting in an index fund, and the index fund owns a percentage of the whatever, and they own a lot of Bitcoin. So you will see that kind of adoption passively creeping into the financial system. I think we did an analysis. We observed there are about 55 million beneficiaries of MSTR. You think they all know that they own Bitcoin? Like, most of them don't even know that. They don't even know who we are, right? So there's a lot of people that are beneficiaries. They just don't know, right? If we ended up getting put in the S&P 500, there'd be 100 million plus that wouldn't know. So I think that's one extreme, which is just passive adoption by osmosis, just because you can't escape it. And then the other extreme is I hold my keys, I run my node, I have my signing device, I have multi-sig, I'm hardcore, right? And I'm very determinate or decisive about it. And then there's everybody in between. I got Cash App or I have Apple Pay, and then on one day Apple will push an update giving everybody access to Bitcoin, and it's like I didn't ask for it, but it's the icon popped up on the phone. Yeah, well, I think that the asset and the network provides a strong foundation for economic empowerment and freedom everywhere in the world, and so I think what they're doing is interesting, and it's good for the world. And I think that as the technology that sits at the layer 2s and the layer 3s improves, and as it spreads everywhere in the world, it will get easier for them to do what they're doing. I think I'd like to see a world where you've got a mobile app that's sitting with a Lightning interface that gives you the ability to move friction-free any currency and or Bitcoin, switching between a fiat currency and Bitcoin anywhere in the world at the speed of light, with privacy, with security, with simplicity.
It is important to note that Powell frequently emphasizes the ever-changing dynamics of cryptocurrency cycles. The contrast between Bitcoin's slow reaction and Ethereum's resiliency illustrates this point. It is still the case that liquidity, adoption, and retail behavior are the most important drivers. Even though there is a lot of uncertainty in the macroeconomic environment, Ethereum's bounce demonstrates how rapidly conviction and money may return when structural support is in place, such as ETF inflows and network adoption. When it comes to investors who are handling volatility, the lesson is quite clear. Rather than reacting to headlines, investors should align themselves with the flows of capital and behavior that shape the market. Those that have a solid understanding of this cycle are in the greatest position to increase their wealth despite the uncertainties that lie ahead.